Hello everyone, welcome back to Upside Down Data. Today I want to talk about risk across the crypto markets. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. So if you've been following the markets, not just the crypto markets, but also the broader equities markets, it's been a pretty bloody last few days, right? Stock market has not been doing well ever since Jerome Powell from the Fed came out and said that they were planning on hiking interest rates more quickly than people were initially expecting, hiking by 50 basis points, for example, in May. That's now the expectation rather than 25 basis points, which had been the expectation before. And so the markets have been having to now deal with that new reality and maybe come to terms with the fact that the Fed might be more serious than a lot of people thought about really trying to bring inflation under control by hiking interest rates quickly. And so that kind of bearishness and that kind of sell pressure in the stock market has translated into the crypto markets as well, and Bitcoin has not been spared. And today, I think Bitcoin's down around 5% as I record this a little bit more. Certainly not an ideal day. So I want to consult our risk indicators, our upside downside potential indicators, and get a sense of what we might expect based on what they're saying. And one of the things that I had been observing with this, I actually put out a video a while ago where I talked about this, whereas that the UDPI had kind of recovered up to around neutral ground across a lot of all the different time frames we monitor. So we monitor long term, which is reactive to moves that play out over months, medium term, which is weeks to months, short term, days to weeks. And what you can see, just if you just look back in time, over the last 30 days, we got to this point where the long term had gotten just about up to zero, medium term had gotten over zero, short term was actually up above one. Not too terribly long ago, more towards the beginning of the month. And that was something that was interpretable in two different ways when it happened, right? It could have been suggesting that a move back up more convincingly to the upside was incoming, something back up to, for example, the 53K type of range, where we're kind of realizing upside potential and then ready to explode up, which is what has happened before, put in a bottom and then really move up and start realizing some of this realistic upside potential. But one of the things I talked about that we had to keep in mind, we had to keep kind of in the back of our minds that whole time, was that this could also just be pricing in a sense, a possibility of a capitulation. The UDPI might be sniffing out that there's more and more realistic downside potential that's building as we've kind of been building out at this current level between the low 30Ks to the high 40Ks, as we've been consolidating, slightly moving up, that there might be more realistic downside that's creeping in, which then might be kind of opening up the floor a bit, that if a move to the downside could happen, look at all this room the model has now kind of built into its estimation. Back in January when we put in our local bottom, the UDPI, the long-term UDPI, was down below -3, way deep in the negatives, levels that you don't see, we haven't seen it in quite a while when that happened. And then now we've moved back up, and we're starting to move back down. And so this is something that I think we just have to keep in mind, that from the model's perspective, it is not inconceivable for us to go and have a capitulation back to the downside. And if that were to happen, obviously we'd like to hope to hold the levels that we've held in the past. Now we're going down, testing kind of the 37, 38K ranges as I record this now. If we had to fall below those, we'd like to hold the lower 30Ks. A move back below that would be quite bearish and might suggest that a move even further to the downside could follow. And so that's just what I'm seeing here, is that the fact that we moved so far up, and especially during that relief rally that we had seen up into the upper 40Ks, there's quite a bit of downside potential that could be plausible. And then we've started to realize some of that in the short term. You can see this really moving back down in more recent days. We're down at -1.58. So we're starting to kind of realize some of that shorter term downside potential, but there's still plenty left to the downside, because again, at that bottom we had back in January, everything was down in the deep negatives here, and we're notably higher now than we were back there, basically just suggesting that we can't rule out the possibility of a capitulation. Now, it's not guaranteed by any means. I think it's really going to depend on what the stock market does, and I'll switch over to the stock market charts in a minute just so we can see what they've been doing. But if that bearishness in the stock market continues, and if we have a real big dive down on those, then this possibility of a capitulation down to the downside becomes very plausible in my estimation. So that's the Bitcoin UDPI. I also want to show the ETH UDPI. The ETH UDPI is also showing just as concerning, if not more concerning, signs. And one of the things that about ETH that was notable was that in the more recent run-up that ETH had, it had gotten all the way above 3 on the short-term UDPI, which in bearish market conditions is quite concerning in the sense that a reversal oftentimes will follow when you do that. It's quite difficult to really push up much beyond that in really bearish conditions. And indeed, we've seen ETH correcting kind of ever since, and then more recently just today, dropping back below the 3,000 level. Not super bullish price action. And here it's even more pronounced than with Bitcoin, this kind of room that's been built into the downside should we go there. That there's definitely room for a ETH capitulation that seems very plausible from the model's perspective. Again, not guaranteed, but I think if we see this broader macro conditions being bearish like they are, and if to price in that kind of new information from the Fed, the market has to move down further, that could easily kind of have a contagion into the crypto space that could hit something like Ethereum even harder than it already has. So these are things that we need to keep in mind. And if we look at altcoins, we can also see kind of a similar thing. Where back in around January, everything was in the negative. There was hardly anything that was peeking its head above the positives. And so we do have some altcoins that are quite deep in the negatives. But overall, it's not really a particularly attractive picture. A lot of them are kind of more up to the upside. And there's a lot of downside that's still plausible for alts. ZIL being kind of this extreme standout here that's way cranked up to the positive side here. And with alts being the more risky sector of crypto, if Bitcoin capitulates, if ETH capitulates, you better believe altcoins are going to capitulate. Sure, there's probably going to be a couple random ones that can kind of defy gravity, but by and large, they're going to get hit and they're going to get harder than something like Bitcoin or Ethereum. And so that's why, investing in altcoins in periods like this is just inherently risky. It's just something that investors in crypto need to understand, is that investing in altcoins is inherently riskier. Sure, there's greater upside should you catch the bottom, but as we've been seeing from this last whole time, catching the bottom on something like this can be quite difficult. And so that's just something to be cautious about. And so, as I've mentioned before in kind of bearish times, when looking at these UDPIs, it's not the case necessarily that something like HNT that's pushing down to the lower bounds here is necessarily hitting a bottom. Because again, if the market continues to be bearish, downside could continue to happen. It would be surprising for HNT in its historical perspective for it to move down further, but it's crypto. Anything can happen, so we have to keep in mind. And so that's where, when I use the UDPI, for example, in these bearish conditions, I don't necessarily treat 0 as being that kind of break-even point in risk-reward in bearish conditions, especially for altcoins. I think it makes sense to kind of view these indicators differently in bearish conditions in terms of what you think might actually be low risk in the altcoin space. Because again, if Bitcoin has room to move to the downside, so do all these altcoins, frankly. And we see similar stories when we look at the medium-term UDPI for altcoins. Here you see things being generally even more kind of neutral than was the case for the long term. Again, suggesting that capitulation in the more medium term is very plausible on a lot of these assets. And then with the short-term UDPI, we actually see things moving down to the negatives, which makes sense because in the last several days, it's been quite bearish across the market. Makes sense for the short-term UDPI to be ticking down to the downside. And so we're just going to have to watch this and see what happens. But again, with these altcoins, I think in some ways I see these UDPI levels being a lot more kind of interesting to watch in terms of bull markets when things are going up for altcoins. But in bearish conditions where a lot of these altcoins are so young that they've never seen a legitimate bear market, the UDPI still has a lot to learn about these assets before it knows how they'll perform in a bear market. So that's kind of the way that I look at them, is that in a bullish conditions, I think the UDPI often does a very good job of calling tops, calling these points where reversals are likely. But if an asset's entering into a space in the market it's never existed in before, so for example, DOT has never seen a full-fledged bear market before. The worst it's ever seen was going into the summer of 21. The UDPI is going to be learning new things about these assets as that happens. But with something like Bitcoin or Ethereum, those have already existed through very bearish conditions. The UDPI has learned a lot about them, how they act in bearish conditions. So it is able to give a lot, in my opinion, a lot of a clearer signal about what's going on in bear markets because it's seen all of that. And sure, some of these older altcoins have seen bear markets as well. But for a lot of these, they're so young that the UDPI is still going to have to learn how they behave in bearish conditions. So we just don't know yet. We haven't really seen that. That's where I personally see kind of Bitcoin and Ethereum being the ones that I look at the most during bearish conditions to get an idea of how much downside might be left. But then if bullishness re-enters the market, I see these shorter term UDPIs being very valuable on these assets to know when to start moving profits off. So for example, something like ZIL, when that went all the way up to 5, I didn't have a ZIL position, but had I had one, I would have been getting out completely, because it was very clear at that time that that move was going to retrace like it has in following days. So just some things to consider. So obviously not financial advice. You should interpret and use the data however you see fit, but that's just what I look at. I think that if we look at Bitcoin and Ethereum, we have a ton of room to move to the downside. And then with all of these altcoins, they're going to follow no matter what, pretty much. Sure, there'll be a couple that might defy gravity, but by and large, I think if the market tanks, altcoins are going to get absolutely slaughtered. Now, just to wrap us up, I do want to flip over just to kind of the charts and see what's going on. And so, as I was mentioning kind of today, it's a very bloody day for Bitcoin. Well, all relative, but it's a bloody day for Bitcoin. It's not something you like to see, being down 6%, going back down and retesting 37K range. We'd really like to be able to hold this range. We would not like to be setting in a lower low than these, because that might start to call into question this kind of general uptrend we had been in ever since January. But really what I think is going to determine what happens here is the stock market. So I'm showing you here the S&P 500, drawn a line here from this double bottom down here. We're coming back down, and trading just closed before I started recording here, but we're moving down to start to try to retest these levels again. And if we drop those levels and have to set in a new low, that's again bearish again. That could trigger more downside for Bitcoin if we start putting in new lows on the S&P 500. And the NASDAQ actually technically did just set in a new low relative from here. I drew this line off of the bottom of this wick. We actually closed, in the last few minutes, literally the NASDAQ went and closed below. And so, this is basically the same, but, as we kind of continue trading for the week, if we start breaking down significantly below these levels, especially given how crypto tends to be very correlated to the NASDAQ, specifically within the equities markets, kind of the more tech-heavy index, I think that could end up hitting Bitcoin quite hard as well. And so really with this big move to the downside we've been seeing across these indices, a lot of this has to do with that new information from the Fed. And I think the question is, how far are things going to correct as the market is trying to price in that new bearish information that came out of the Fed? And then how long will it take for that to kind of get sorted out and get priced in? But as long as the market has to move down to price in that news, I think we're going to see that falling out in crypto as well. And so an asset like Bitcoin certainly will correct. Altcoins will get hammered by and large, most likely, as well as something like ETH is my expectation. So that's just kind of my base case. Is what I'm going to be personally watching closely is the stock market, because ever since really kind of this whole correction, I've seen the stock market kind of being leading the way, and crypto more or less being kind of hemmed in by broader macro conditions. And so that's what I'm going to be watching to get an idea of where I think we're likely to go. But if we start getting especially bearish on the stock market, start setting in new lows, that's where we're going to probably be looking at some of these lower levels with Bitcoin as well. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And over there, we put out a lot of updates about our risk indicators and more.